can see there, JP Morgan stock up 3.5% today, 35.22. Bank stocks are doing well in general. JP Morgan and Wells Fargo both reported earnings. Banks leading the Dow, leading the market higher today. The Dow up almost 150 points. If you're wondering, maybe thinking that things were so dark for JP Morgan that nobody would want to invest in the company anymore, well, you're clearly wrong, because you can see from the stock there that they are finding some investors today. Dave Benoit, the man, I have nothing but respect for this man today. 2-hour marathon conference call JP Morgan had on their earnings. I mean, companies never have 2-hour calls, so obviously a lot of issues. You live blogged the whole thing, ended a little while ago.
Right.
Give me your broad takeaway from this session.
Well, like you said, there was kind of a lot going on. I think earnings-wise, they were very bullish. They felt pretty strongly about
even though earnings were down from a year ago.
Right.
Revenue was down sharply from a year ago.
Right, about 17%. But the earnings were better than expected, and which, you know, take with a grain of salt. But they were very, very bullish on kind of their economy earnings. You know, their business loans, everything like that, tied to, you know, growth.
Consumer business, how'd that look?
It looked good. Small businesses were very strong. They said loans to businesses were the best they've been in years.
Now, obviously, that was far from the story today. Even though it was earnings, the big story was not about the earnings. It was really about the London whale, the trades, how big the losses were. We were talking about that earlier on the AM show. Like, what were the analysts saying about this?
So this 2-hour call, they actually brought in the analysts into JP Morgan headquarters. So this was face to face.
Usually it's all a phoner.
Yeah, it's just phone. So numbers 5.8 billion right now in the losses from this trade. That's up through Thursday, they said. They took 4.4 of that in the quarter. Analysts were definitely kind of asking lots of questions. The number itself actually wasn't getting that much attention. They weren't too worried about it. It was pretty much right in line with what everyone had expected, apart from one report.
A couple of weeks ago,
But so in that case, that was good. They did ask, you know, how much worse could it get? Jamie Dimon said, you know, in the worst possible case scenario that he doesn't expect to happen, it could hit another 1.6 or 1.7 billion, but more likely closer to the 800 million. Or they could make money on it. Really, the big concern was their risk control here. They announced this morning that they're also going to restate the first quarter. And that was kind of a big signal to everyone.
This was a big surprise. No one expected this, right?
They'd already somewhat restated some of the numbers when they came out and said, hey, we have this loss. They went back into their filings. But this is, they're restating the quarter. They have to go back. They decided yesterday in their audit committee that they had enough evidence that they were being misled by traders on the value of this position in the first quarter that they felt they had to go restate.
That's quite an admission. I mean, that really is quite an admission for them to make.
Material.
Now, on the call, what did people say about that?
So
how did they respond to that?
There was kind of a lot of questions about, you know, does JP Morgan have a broader problem here? You know, they said multiple times this is isolated. This was a one-time event. They're taking back 2 years of pay from these guys, these 3 employees that have now left the bank. And definitely it sounded like JP Morgan executives were trying to pin it on, hey, we got these 3 guys that really kind of misled us here. If people were concerned, I mean, there's definitely, we've talked a lot about this is a big hit to Jamie Dimon's reputation as a risk manager. And this is, I mean, today even more so.
Look, I know they're a big bank, and it's amazing, right? They had a $4.5 billion loss this quarter. Revenue's down 17%, and they still earned $5 billion, right? I get it. They're a huge bank. The fact that they missed what has turned into a $6 billion loss, I don't know how you can just brush that off and say it's a one-time thing.
They were asked by one person in the room again about kind of splitting up the bank, which is something that came up earlier this year.
I wanted to ask you about that.
Mike Mayo, noted analyst, has kind of been pushing for it. And Dimon kind of shot back again. You know, they are very much against this. He views it as the reason we have that $5 billion profit this quarter is because we're so big and so strong. In his defense, you know, he says lots of small banks fail, lots of monoline.
But of course, on the other argument is that because you're so big, that's maybe why you missed a $6 billion loss.
Exactly, and I think they concede that. I think they're willing to say, listen, we can't, you know, well,
do you think,
not we can't.
We have to wrap this up quickly. Do you think that issue is going to go away, the issue of splitting up JP Morgan?
No.
Yeah. I think it's going to stay.
I don't know if it's going to happen, but I think it's going to be asked.